What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Friday, May 10th. All right, guys, big day here for Nvidia stock. First of all, it's down $16.65 per share. That's minus 1.84% in regular trading hours. It's up just a little over a buck here in the after hours. Let's take a look here. We're going to talk about everything. We're going to do our volume profile analysis, pull out some bias out of the underlying movement that isn't necessarily obvious in the price action, if we can pull anything out of there. The psychological levels are going to be a big deal, so, we're not the only ones watching them. We're watching them because the big money is watching them. That's the only reason I care, so we'll take a look at that. Implied volatility, we'll take a look at the expected move, and finish out with the directional bias for tomorrow coming out of the chain. So let's get started here with the 5-minute doing that volume profile analysis to try to look under the hood and pull out what we can. Listen, guys, if you're new here, NVIDIA is a daily upload, so I appreciate you subscribing to the channel. I will keep the NVIDIA videos coming. My goal here is 10,000. So with your help, I think we can hit that soon. I appreciate it. Let's take a look. Now, I'm particularly interested in that open. So if we look here, guys, we held a little extra volume on not so much battle bars, right? Like these candles weren't extremely wicky into the day. That first one was, but these three to follow, they weren't extremely wicky. Of course, they had some, but they held higher volume deeper into the day than what is typically expected. Listen, that's a little bit of bearish bias, but to be fair, the bulls also held a little higher volume than what's expected. It's not like this volume just cut in half immediately. It slowly faded along with the red volume, as is contextual. So the bias for this entire open is leaning slightly to the bearish side, but I don't want that to come off as if the bulls didn't show up, because they certainly kind of held their own by holding volume deeper into the day as well. Now, as we move through that morning session, through the intraday, this here, guys, it's not out of context enough. Like if we were seeing 3, 4, 5 out of context, meaning high volume, higher than normal volume bars, consecutive red bars, like 3 to 5, that would be obvious bias, but that's really not what we're seeing here. So we have to skip over that, at least to, it's too risky to start assigning bias to little pops like that. We'd be looking at every little candle. I'm only after what's relatively obvious. All right. And then into the close, you might look at this and say, well, that's relatively obvious. Listen, that's the rebalancing bar. It's going to be a lot of buying and selling volume. So they tend to be very little movement. When it's all said and done, as you can see there, very little movement, and it tends to be triggered by algorithms upon the closing bell, so that pumps the volume up, and I tend to ignore that one, but a very contextual close nonetheless. Okay, so there is not tremendous bias really, because all we really had here was a little bit of bearish bias off the open, which is where the majority of this move occurred, and then the bulls kind of just tried to hold their own and basically ended up neutral after this big red downside move into the end of the day, which, all things considered, not too bad. But those psychological levels are going to be important here. So let's get started with specifically the 30-minute chart. And these are the self-fulfilling prophecies, right? Now, if we look here, guys, bulls, right? The goal when we talked yesterday was to try to reclaim that 50 period that we were struggling so much with. We attempted in pre-market, faded quickly on high volume off the open bears. That's what you guys like to see. But as we came into that 200 period, we bounced relatively hard off of that and held it into the close. Now, you can see these two are coming together and they're forming a tight channel now, less than 10 points. So on the 30-minute chart, this thing's going to have to make a decision here. Bulls, I want to see that 200 period act as kind of a trampoline. I want to bounce hard off that 200 period, give us the momentum to rip up through the 50 period and reclaim that 50 period as support. Whereas bears, if we do retest the 50 period, you want to see that reject hard as resistance, but your ultimate goal is to break downside through the 200 period and claim the 200 as resistance, which would put you bears in a relatively decent spot, at least specific to the 30-minute. Now, moving on to the 4-hour here, you guys can see that this one is becoming very much so in play. We currently find ourselves about 1.2% from both of those. You can see the 50 periods crossing over the 200 period. You're probably going to see a lot in like chat rooms, or maybe you're in our server or something. You might see someone talking about that crossover. To me, crossovers in the form of moving average crossovers, they're overhyped. To me, they mean almost nothing other than the psychology around the faster moving average now being closer in terms of a psychological level. That's the only reason I care, right? So listen, if I'm looking at the 4 hour with a bullish perspective, if we go down and test the white line, the 50 period, I want to bounce off of that, and that would hold both of those as support. Whereas bears, ideally ripping downside through both in one motion, retesting whichever one happens to be lower, likely the 200 period at that point, and rejecting, then claims both of those as resistance. So big opportunities for both sides when the stock is close to both moving averages when they're in very similar positions, because one decent move can hold both or give both up, and that means a lot for either side, whichever one happens to win. Okay, now the daily chart. Man, we can't get a break here. The daily is very much in play as well, and you can see here there's a lot going on. So we've been talking a lot, first of all, about $900 a share, right? Well, we finally gave that up today after reclaiming it a few days ago. But now listen, it's not the end of the world. That's the first level, okay? There's a lot of muck, or at least a bit of muck, right? We still have the 50-day and 850. So listen, bears, not yet out of the woods, okay? Because we've been talking a lot. That 50-day moving average is now kind of staring you in the face as a potential support. But bulls, if we test the 50-day, you need to see that hold as support, at least with a short-term mentality. I want to see that hold as support and ideally use that to get some momentum to drive back up out of this channel of 850 to 9 and reclaim 9 as support. Whereas bears, you would like to use 9 as resistance to give you guys the momentum to drive down through the 50-day moving average, which then sets you guys up for a potential test of 850. And if you bears can get downside through 850 at some point in the near term, I mean, that's some good work in a couple of days. All right, now implied volatility. Okay, it's up. It's up quite a bit here today. So if you compare this to the last, let's actually zoom out a little bit more and then come back in here so we can compare to the last 3 or so months. It's in the higher range now. Okay, so if you experience some IV pump today in your contracts, that would be why. At the same time, if you're looking to buy calls or puts right now, understand that you're paying a bit of a premium. In that Vega value, there's a little more implied volatility value already baked in that you're paying for, that if that falls, that will negatively impact your contracts, at least from that one Greek side of things. Now listen, Thursdays make our lives very easy in terms of the expected move because we have a Friday expiration, since we really only have weekly expirations on these stocks. So next expiration is tomorrow, May 10th. The expected move by tomorrow's close compared to today's close is plus or minus $18.52 a share. So that's just a little bit more than we saw today. That's the volatility expectation, but the directional bias. Okay, 1.34 million total contracts traded today, 823,000 calls, 517,000 puts. That's a bullish bias coming out of the chain on the overall call put ratio. And if we go one step further and break that down by time frame and take the highest concentration of short-term speculators out of the 0 to 20 delta range, we get 343,000 calls and 203,000 puts. So call side bias out of the short-term speculators as well. Now listen guys, if your goal with this whole trading deal is to try to expedite the process, whether your goal eventually is full-time, part-time, or even just a side hustle, I encourage you to take a look at our private community. I originally built it out for that exact purpose 3 years ago, and I still spend every day and will continue to do so with my group in the server. So they're getting every day my daily scalp setup alerts, in-play stock alerts, unusual options activity, which I human verify every single one as truly unusual before it hits the server, and then working with my Platinum one-on-one group. Hope to see you guys inside. You can take a look at that link in the pinned comment. And hey, if you're getting value out of these daily Nvidia uploads, I just ask you to leave a like on the video and then get out of here and enjoy your day. Listen, I appreciate it, and I'll see you in the next one.